Did you know the US owes over $36 trillion? That's more than the entire economy. Interest payments could hit $1.5 trillion a year, and it's your taxes, your prices, and your future on the line. Is America's economy doomed? I'm breaking it down on Buck Breakdown. Stick around to find out what this debt bomb means for you. Today we're tackling the US debt crisis. The national debt reached $36.2 trillion in February 2025, and posts on X are referring to it as a fiscal cliff. But what does this mean for your taxes, inflation, or your kids' future? Let's dive in with data, charts, and a plan to protect your wallet. What is the national debt? First, what's the national debt? It's the total money the US government owes, like a massive credit card balance. As of February 2025, it's $36.2 trillion, up from $33.1 trillion in December 2023. That's a $3.1 trillion jump in just 2025 over a year. It breaks down into two parts. $29 trillion is debt held by the public, owed to investors, banks, and countries like China. The other $7.4 trillion is intra-governmental debt, money the government owes itself, like Social Security trust funds. Why is it growing? Every year, the government spends more than it earns from taxes, creating a deficit. In 2025, the deficit is projected at $1.9 trillion. To cover it, the Treasury sells bonds, piling on debt. The Congressional Budget Office says deficits will hit $2.7 trillion by 2035 if nothing changes. Debt-to-GDP ratio explained. How bad is $36.2 trillion? Let's look at the debt-to-GDP ratio, which shows debt relative to the economy's size. In 2024, it's 100%, meaning our debt equals our GDP, about $28.2 trillion. By 2035, CBO projects it'll hit 118%, the highest since World War II. For context, Japan's at 243%, but their high savings rate cushions it. The US, not so much. A high ratio isn't a death sentence, but it's a red flag. Penn Wharton says debt can't exceed 200% of GDP without markets freaking out. We've got about 20 years before that limit, assuming no big changes. Interest payments. The real threat. Here's where it gets scary. Interest payments. In 2025, the US will spend $952 billion just on interest, more than Medicare or defense. By 2026, it'll hit $1 trillion, and by 2035, $1.8 trillion. Why? Rising debt plus higher interest rates, up from 1.5% in 2020 to over 4% in 2024, mean every new bond costs more. CBO says interest will eat 3.2% of GDP in 2025, a near record. Ex-users are freaking out, saying interest could hit $1.5 trillion soon. That's possible if rates stay high or debt grows faster. This crowds out spending on schools, roads, or tax cuts. Worse, 30% of public debt, $8.5 trillion, is owed to foreign investors like China. Those payments drain national income. Impact on taxes, inflation, and future generations. So how does this hit you? First, taxes. To pay interest and deficits, the government might raise taxes. The Tax Foundation says balancing the budget could mean a 33% tax hike across the board. That's $12,700 more per household by 2034. Second, inflation. Printing money to cover debt could spike prices. Inflation hit 7.2% in 2021 after big spending. Imagine that again. Third, future generations. CBO warns debt will hit 156% of GDP by 2025, leaving your kids with higher taxes or fewer services. It's like passing them a $36 trillion credit card bill. Recent events like the January 2025 debt ceiling reinstatement at $36.1 trillion show Congress isn't slowing down. What can you do? Is the economy doomed? Not yet, but we need action. Policymakers could cut spending. Social Security and Medicare are 61% of the budget, or raise taxes smartly, like a carbon tax. A bipartisan fiscal commission, as CRFB suggests, could find solutions. For you, here's how to prepare. Save smarter. Build an emergency fund. Interest rates won't drop soon. Invest wisely. Hedge inflation with stocks or tips. Stay informed. Follow Buck Breakdown for updates. The U.S. debt crisis is a ticking bomb, but knowledge is power. Share this video to wake up your friends. Drop a comment. Are you worried about the debt? Subscribe to Buck Breakdown for more no BS economic breakdowns and check our inflation reels on Instagram. Links in the description. Let's keep breaking it down.